Recording in progress.
So, hello everybody. I'm sorry for the technical glitches that we've been facing due to the login credentials. I would like to welcome Mr. Navneet Munot with us. He's a very special guest and has grown up on the corporate ladder and has stuck to the ethics and principles of ESG. A very conscious individual with more than 3 decades of experience in the financial industry. He's a MD and CEO of HDFC Asset Management Company. And before that, he also worked with SBI Pension Funds, SBI Mutual Funds, Birla Sun Life Mutual Fund, and has a very amazing career growth, and today we see him at the helm of affairs, taking the decisions even where India could take it forward. We all would like to welcome you, Navneet. Welcome on our show.
Thank you. My pleasure.
So, Navneet, you have worked close to 3 decades in the financial industry, seeing the conventional economy to witnessing the transitions. When did you see the inflection of the financial industry towards sustainability, and what led to it?
Sure, Isha. So actually the ESG has become quite, I would say, mainstream now. But I mean, if you look back in the history, the global interest in responsible investment, I mean, ESG is a more recent word, last maybe couple of years, maybe a decade or so, but it was known as variety of words: responsible investing, socially conscious investing, or socially responsible investing. That can be traced back to faith-based or value-based investing, where some of the investors were not investing into socially negative sectors, which is purely based on the personal beliefs. So exclusion of sectors like tobacco, controversial weapons, gambling, alcohol, so on and so forth. And then as the fund industry was growing, there was a time, like sometime in 80s or 90s, where investors recognized, those who were activists, that shareholders could influence corporate behavior, shareholders could influence corporate managements. And this pressure on fund managers to avoid investing, for example, as a good example is like pressure on fund managers to avoid investing in companies operating in South Africa. That was like held up as one of the factors that helped end apartheid. And 80s and beyond, when we saw more and more people talking about the environmental concern, I mean the climate change as a risk to the world, as risk to the investing, as risk to overall, I would say, corporate world, that gained more attention. And there were so many of these natural disasters that happened over the decades. There was an awakening about the threat from climate change. And I think that also led to investors paying attention to the E part, the environment part. And I think the another tipping point may have been the global financial crisis of 2008-9, which was basically a good reminder of interdependence between societies, financial markets, and economies. As we all know, the crisis was actually in the Wall Street, but it led to a big disruption in the Main Street also. It impacted every human being. So there was a clear evidence that market pressures do not always result in like the best outcome for wider society. So I mean, there was a lot of debate around just excluding certain sectors or certain set of companies. But I think the realization came that there is a need to actually incentivize companies with good practices, irrespective of the sectors they are in. How do we create more positive stakeholder value for the long term? And that gave rise to the whole new ESG paradigm, where investors believed that companies that worked for the triple bottom line, the people, planet, and profits, companies that focused on sustainability would yield better returns in a longer term horizon. So I think we have seen particularly in the last 1 year, the COVID would have been like another big catalyst. And now we are witnessing more and more investors, more and more corporates. I think the wider society clearly recognizing the importance of S part as well. I mean, with the rising inequality, several other events like the Black Lives Matter, which has led to a lot of focus in the corporate world on diversity and inclusion. And now we are clearly seeing that ESG is becoming a mainstream rather than just one thematic investment side of let's say certain set of investors. I'll also just mention one thing, if I can summarize that, what are some of the bigger factors which are driving more interest in ESG? There will be like 3 or 4. Number one, that the world is changing. The reality is now there is no debate around the risk from climate change. That, I mean, the planet is warming. We are losing our biodiversity. There are a variety of challenges which stems from the climate change risk. The world is also changing, as I mentioned, about the social aspect, that inequality is rising. If we look at the Black Lives Matter and several of the other social movements over the last couple of years. So that's one, that the recognition that world is changing, the planet is changing, and we need to do something about it. Second would be like a policy nudge. There is so much of policy nudge from policymakers across the world towards driving corporate behavior or investor behavior towards recognizing these aspects. Third would be like the clients themselves. So when particularly the younger generation, the millennials and Gen Z, when they are buying stuff, when they are buying services, when they are investing money, which employer they choose, they are clearly looking for certain corporate behaviors. And I think, and particularly the companies that score high on ESG, they prefer that. I think that is also kind of creating more awareness or more recognition of the ESG. And last but not the least, if I can add one more, is like the quality of data and analytics are also improving. Your ability to measure several things has also gone up with the like proliferation of I would say data and the availability of information on social media. The awareness is getting created. The amount of disclosures that are coming from various parts of the world. I think all of that are also helping the improving the cause of ESG.
Wonderful. I see that there are many factors for all of us to be more ESG compliant and to be more conscious. Now, what is the importance in your eyes for non-financial reporting and the types like ESG, SDG, CDP? And how do you see that ESG funds are evolving in India?
So, I mean, so before we talk about, let's say, the non-financial reporting, the NFR, I mean, even for the financial reporting, it's taken a long time for standardization, for your ability to do a relative comparison. The double entry accounting system has been around for several decades, if not centuries, but it's still, I mean, every year you have debates around how should we account for lease, how should we look at R&D spending, how should we look at employee options, the accounting, etc. And also it's been evolving. The same is with sustainability. And then there are various of these reporting frameworks. I mean, this SBI is working on it. You have the CDP, you have GRI, variety of them. I think one has to look at the materiality in like each sector, each country, each geography, and all of that. And Chair, I mean, if you look at the financial sector, which definitely gets impacted in terms of whatever happens in the non-financial sector or in the real economy. Investors or regulators are also keen that financial sector is also upping the game in terms of overall disclosures as far as sustainability is concerned. So all of these frameworks that you talked about, and whether the TCFD and variety of others that have helped the financial sector also to come out with better and better quality NFR is surely helping. I think the EU is far ahead, I would say, in all of these over the last several years. I think right from, if I remember, 2014 or 15, and after that the number of guidelines. I think the EU started in 14-15 with the I think the first guidelines, but after that particularly in 18-19 when they had the EU guidelines on climate-related information, the whole TCFD framework, the new taxonomy that has come, the CBI taxonomy. I think the PRI, like you have the UN principles of responsible investing, as well as for the bankers, the UN principles of responsible banking, the whole lot of these integrated reporting frameworks, etc. Now you have large amount of bond issuance. So I think when companies are issuing bonds, or the issuers, I mean the investors or the arrangers or the merchant bankers, they also have to comply with a lot of these disclosures. So overall disclosure levels, even for the financial sector, has improved, and we have really come a long way, I would say.
So
you asked about the Indian ESG fund. So that's more recent. I think the first fund was in 2018 by SBI. After that, a couple of funds have got launched. I think now it will be like $1.5 billion. Most of it would be like based on exclusion. So most of these ESG funds in India are purely based on excluding certain set of sectors. In fact, the sectors that I talked about earlier, tobacco, alcohol, thermal power, and some of them. My sense is that over a period of time, we need to look at ESG from a much broader lens rather than just voting with our feet and just excluding some of the sectors. Over a period of time, I guess that we'll have more number of funds which will also look at best in class, which will look at more integration with the overall investment process, investment philosophy, rather than just excluding some of the sectors. There would be funds that will look at positive impact, let's say financial inclusion or reducing the carbon footprint, etc. There could be a lot of other thematic ideas that can happen. So we have a long way to go. I think engagement from the AMCs has certainly improved in last few years, and we are seeing investor interest increasing into the ESG fund, which is a very good feature.
Wonderful. Now, understanding that there are funds being started since 2018, it's been 4-5 years now. So, how do you see is the disclosure of ESG by the Indian companies? How prepared are they, or what can they do more to avail more FDIs, maybe, or even now ESG funds?
So in India, if we look at our overall disclosure standards, as far as the financial data is concerned, as far as the governance reports are concerned, like all the financial data are of very high quality. The governance reports, which are as required by the SEBI and various other statutes, I think they are very high quality. On the S factor, I think all the CSR related efforts that companies do, I think their disclosures are pretty decent, and some qualitative efforts are going on in terms of disclosure of E and S factor. I mean the environment and social impact parameters. Where I think we need to do a lot more in India, like a lot more, I would say, quantitative parameters on emissions, on water usage, on waste management, etc. Over a period of time, I guess that more and more science-based targets for emissions or the carbon disclosures based on TCFD framework, and how corporate sectors, the more important is aligning their own targets or goals to India's commitments, like the Paris commitment or SDG initiatives, etc. And over a period of time, I think what we need to do is how do we perform a fit for context materiality assessment? How do we track business impact on the, as I mentioned, relevant UN SDG and build the how are we, the corporate sector is doing on the national indicators, and bring it all kind of together in terms of integrated reporting. And this can be, this can evolve over a period of time. I think if you are aware about the BRSR requirement, which will be compulsory for a large number of corporates from next year onwards, I think some of these things will go a long way in improving the disclosure by Indian companies. If I know correctly, I think almost 80-90 companies are releasing their integrated report. A lot of companies are now coming with this sustainability report, but I think we need to increase that number very, very substantially, and companies need to disclose a lot more on what they are doing on energy transition, what they are doing on the sustainability side, and various other initiatives that are going on in India in terms of clean mobility or reforestation or more sustainable agriculture or variety of the other things. I think better disclosures will really help investors as well as the wider society.
Wonderful. So we see that a lot of action is happening and a lot more to be done. So what steps do you think that the governments of emerging countries like us and others and the corporates and MSME sector should take in order to accelerate the implementation of ESG?
So on the corporate side, I think sheer need, I mean, one is what the government and policymakers recommend or what the policy will ask you to do or the guidelines will ask you to do. Simply the fact that this year sustainable debt issuance, the debt side of the issuance will cross $1 trillion. Now you also have, if you look at globally, the ESG focused funds, I mean, whether the ETF, index fund or actively managed funds are, if I remember the number correctly, are already nearing $4 trillion. And if you look at the AUM of the asset managers who are focused on ESG or who are committed to ESG, that's almost touching $40 trillion, maybe I think $35-40 trillion, and likely to touch like $50 trillion in next 2-3 years. And as the Gen Z and millennials, which I talked about earlier, they become more and more important from the investing world perspective also, and almost $40 trillion of wealth will get transferred to this generation. And as we discussed earlier, this is a generation which not only looks at what my money is earning, but what my money is doing to the planet, what my money is doing to the society. Then obviously, I think companies will be a lot more, I would say, focused or would be a lot more conscious on various various ESG aspect. Also, almost all the multilateral institutions or sovereign wealth funds, the other funds which are a large investor in India, or let's say most of the other emerging countries that you talked about, are clearly focused on that. So I think the whether it's the corporate sector, whether it's the policymakers, whether it's media, whether it's people like you, all of us need to work together. That how do we ensure a just transition? Climate risk is for real. This is going to impact larger and larger part of the society, particularly those who are less privileged. So how do we ensure a just transition? How do you, all of us work together on financial inclusion? How do we all work towards achievement of all the NDCs, whether it's the Paris goal or SDG, etc. And then whether it's our taxonomy, whether it's our policy framework, whether it's the guideline in terms of disclosures, etc., they all have to be then coherent to, I mean, they should be coherent among all of them to nudge everybody towards these goals. And I'm sure over a period of time, we have been moving in the right direction. The one thing I would add that there is a relevant for every country and more so for us as well, that we shouldn't just blindly follow what's happening in the Western world. I mean, we have to contextualize it. We have to look at our own, I would say, at what stage of development we are, at what stage of the societal evolution we are, and how do we contextualize to our own needs and our own goals, rather than just simply copying and pasting what's happening in other parts of the world.
Completely agree. We need local solutions for the global problems.
Absolutely.
So, Navneet, what in your viewpoint would be a ESG compliant company?
If you ask me, I mean, that word itself is like, when you say compliant, I mean, that's like tick box. Of course, I mean, you need a framework, because I mean, I always say this: what gets measured gets improved. So you need to have some parameters on which you get measured and you can be compared with your peers, etc. But at the end of the day, I mean, if you believe in ESG, it has to be part of the DNA of the organization. And for that, it has to flow from the top. I mean, leadership has to have a deep commitment. and right from the board to the management and everyone, I think they need to have a deep commitment. It should be part of the culture rather than just ticking the boxes and say that we are an ESG compliant company and we just focus on a numerical score that, okay, our score has gone up by 2 because we put these 3 things on our website. I mean, you may be doing a lot of things which may be harmful, but you just try to manage that number or tick those boxes. That may not be right. I mean, logically, if you ask me, what should be the idea of a corporate, that my current earnings are not borrowed from the future, my services or my products, or as an investor, if I'm investing in other companies, then I ensure that their revenues are driven by sustainable practices, by sustainable policies, and ultimately whatever we do is good for the wider society. So it's a journey. I mean, you think how to do less harm. I always say this. So you do like how to do less harm, how you do good, and then how do you create positive impact, and then keep focusing on all of those. It's a journey, and it's a culture rather than, I would say, an ESG compliant by ticking the boxes.
Very well put up. I totally agree with you. We all have decorative reports, but the ground realities are far different. So what is your vision for HDFC AMC Limited for the upcoming 5 years? Now you've taken such an important role.
No, it's a great organization over the last 20 years. The kind of franchise that has got built. I mean, when we look at our people, our products, our performance, our presence, I mean, across the country, our digital presence, I think the pedigree of the brand and the platform, it's an outstanding organization. But I think over the next couple of years, as India's ambition is to be a $5 trillion economy, we believe that as an asset manager and leading asset manager in India with the kind of brand and reach that we have, our mission that we have set for ourselves over the next 5 and maybe much longer period is to be the wealth creator for every Indian. That currently, I mean, there are only 2.5 crore unique investors in the mutual fund industry. There are 10 crore folios, what we call accounts, but the unique investors are only 2.5 crore. That number should be much larger so that a larger and larger part of the population can enjoy the fruits of the overall growth of the economy. And vision is, I mean, it may sound a little audacious, but we have set a vision for ourselves to be the most respected asset manager. And which means that we have to be respected by all our stakeholders, which include, I mean, our people, our partners, shareholders, our vendors, and of course, the larger society as well. And how do we ensure that whether it's on the E part, on the S part, and on the G part, I mean, I mean, just like we are part of an SDFC group, and our group is known for the highest standards of governance and the value system and the ethos. With those ethos, we just take the asset management opportunity, our wealth creation opportunity, to a larger and larger number of Indian investors, Indian households.
So we will see more ESG, SDG, and similar related funds coming up from HDFC.
So, I mean, we strongly believe that, as I mentioned earlier, that ESG is not about like voting with your feet. Large institutional investors like us should actually focus on constructive engagement. I think we should not behave like the typical, I mean, unless, I mean, you really find a fault with the management where the scope for engagement has been exhausted. But otherwise, I think better is to have constructive engagement, better is to act as a good steward and improve the governance over a period of time. So my new definition of ESG, I mean, as an acronym, of course, is it is the environmental footprint, social impact, and governance, but it should be like, for asset managers like us, should be engagement, stewardship, and governance. And that engagement includes all the parts, right? I mean, environment as well as social. On the stewardship, I think it's both environment and the social part, and of course the governance. And so the third actually could be like, how do you take by better engagement and better stewardship? How do you take the company, your investee companies from good to great.
Wonderful. What do you think are the international trends in the financial sector for the non-financial reporting?
I think we've talked a lot about the whole EU, what's happening there. I think it started in like 2014, 15 or so, and they've really moved forward. I think whether it was the EU guidelines, I think it was in 18 or 19 on the climate-related information, the whole TCFD framework, the number of banks and financial institutions and the investors who have signed the UN principles for both, I mean, as responsible investing as well as responsible banking, the whole SESB framework. I think now they have a good taxonomy, EU as well as the CBI. A couple of other countries are following it. As I mentioned earlier, huge amount of bond issuance, which is happening on the which are like green bonds or sustainable finance bonds. So now you have a lot more disclosures coming in, both from the companies as well as from the institutions. So I think there are a lot of these frameworks, TCFD and others, which are driven both by the regulators as well as the market forces, and we are seeing, like, whether on the sustainability performance or I mean, some of them as part of their regular corporate disclosures, or several of them would have a separate sustainability report, etc. So I think it's been like a last couple of years. These things have been moving at a very, very rapid pace. But as I said, that I mean, it took several decades for the financial information to reach where it has reached, and still every year we debate one or the other aspect. So this is a lot more complex and a nuanced subject than a pure financial reporting.
I totally agree with you. This is my last question, but not the least. IICSR is the dedicated research and development capacity building training institution for responsible business leadership. What kind of courses you think that we should be taking up, and what are the initiatives shall we take to become an accelerator for the process of developing responsible business leadership?
So I mean, at a very young age, Harsha, compliments to you for the variety of things that you have been doing, the things that you have been driving with various stakeholders. Keep doing that great work. And I'm sure, I mean, keep spreading the message that leaders need to put purpose ahead of profitability. I think if we keep the purpose at the center of everything that we are doing, I think the values are more important than purely value in quantitative terms, the way we think about shareholder value or a corporate's value. And it's given that focusing on purpose isn't, I mean, you don't have to have really a trade-off with profitability, or it's not a trade-off with a lot of other goals that an organization may have, but actually it leads to a more sustainable growth over a longer period of time. It's in your interest. I think keep spreading that word. Also, I think in terms of increasing the awareness around these topics, as I mentioned, I mean, these are like early days. We have a long way to go. So various stakeholders, whether it's the people who are working in the corporate setup, people who are part of the investing world, people who are responsible for policy making or regulation, people who are from, let's say, media or the other influencers. So people from various parts of life. I mean, whether it's the NGOs, whether it's the other professional and the bodies and the business chambers, both, I mean, domestic as well as globally. I think that will be good, because I think at the end of the day, what we are all saying is that, I mean, what is good for society is also good for us individually. I mean, as a professional or as an organization. And I think how do we all work together? And it's a common goal where there are like no trade-off between I mean, your interests are against my interest. I think if we try to achieve these goals, then they are in the collective best interest of everyone. So keep doing the good work, and I'm sure all the other participants who have been there in this workshop, they will spread that word a lot more, I hope.
Yes, so we have few questions over here, and also as you're asking your question, you all can please share your certificate and we can take a picture of yours with sir. Go ahead, Johnny.
Thank you. So, shall I go with asking the question first, or?
Johnny.
Yeah. So, sir, if you talk about mutual fund industry, retail investors, I think, take a greater pie, maybe more than 54% over and above the HNIs and the corporates, right, sir? So, suppose, sir, if you want to launch a ESG fund, okay, then what should be their strategy? Because as we saw, retail investors, I mean, working professionals like us, to be very frank, it is difficult for us as well to understand ESG and imbibe ESG. So what should be your strategy when once you launch the ESG fund? It would be how create awareness, or it will be like, say, you will create some carrot. For example, you will say these are the funds wherein we will have a minimum exit load or minimum expense ratio, or maybe strategy like punya bhi paisa bhi or something like that. So what could be the strategy?
So I think the message actually should be that what is good for the society is good for your portfolio. And you don't have to give an, if I mean, then you're actually defeating the purpose if you say that I'll charge less or what. I mean, what you're saying is that there is a trade-off between ESG and making decent returns, which is not the case. I mean, if you start with that belief, and that's why you have to incentivize in a different manner, because I think you look at like last 10 years or so from the time NSE ESG index is there. As far as I know, the last I checked, it has done better than the underlying NSE 100 index. And globally, I mean, there are ample of these evidence where ESG investing has not come at the cost of returns as well. So I think it's creating the awareness that anything which is promoting sustainability, anything which is kind of integrating sustainability into the portfolio is good for you. At the same time, as I mentioned earlier, that the way people are looking at ESG, just I mean simply excluding 5 or 6 sectors and some companies based on the external rating, that's not the way ESG should evolve. I mean, maybe this was the first step, but over a period of time, the better evolution would be where asset managers focus more on better engagement and acting as stewards rather than just kind of I mean looking at the index or another an external rating and just buying a couple of stocks and vote with their feet on on some others.
Sure, sir. So thank you so much, sir. And I would my takeaway for the day would be what gets measured gets into. Yeah, thank you so much, sir. And Harsha, if you can allow us.
I must say
Sorry.
this. So having said that, I must also add. I think it was Einstein who said that not everything that is counted counts, and not everything that counts counted. Yeah, it can be counted.
Okay. Okay, I just noted down, sir. Yeah, yeah. So, Harsha, if you can allow the screen sharing, I can share the. Okay,
Yes,
yes,
you can share the screen. You can share the
okay.
screen.
Okay. So, is my screen visible?
Yes.
Yeah. So, sir, basically, this is the sixth course I have been doing in last 2 months with IICSR, and because it's a clear combination of theory, practical aspects, and the more thing, the one thing which I like is the at sitting at one place we can interact with delegates like you. That is the biggest advantage. And the group projects also are very interesting. I mean, yesterday night till 10:45 we were discussing about the group projects. So that was about that. So thanks IICR for giving the opportunity, and thank you so much, sir. I'm fortunate to interact with you, sir. Thanks. I'm looking forward. Yes, thank you, sir.
Congratulations, Johnny, for
Congratulations.
Thank you. Thank you.
Thank you. I believe our colleague Ravi has a question. Ravi, would you switch on your camera and mic to please proceed? Okay, I'll ask his question on behalf. So does it make sense to do dedicated course from US in sustainability management for someone making a career change after having worked for 10 years in the financial industry?
I'm sure there will be a lot of resources available and a lot of, I would say, academic courses which might be available. I don't know which one you are referring to from US, but I think that there are now a large number of institutions globally working in the area of sustainability. When you've gone through this course from IICSR, there'll be a lot of other organizations. I remember the CFA Society UK used to do an ESG certification, which is now, I think, has been part of the CFA Institute, and at some point in time may be available to people in India as well. And then there are various other specialized courses in sustainability and ESG, etc., from various universities and various institutions globally. So depending on your interest, it's a very wide subject. You want to look at climate change in particular, you want to look at the S part, you are focusing on corporate governance. Depending on your interest, you can choose some of them.
All right, thank you. Anyone else who have downloaded their certificates till now and would like to show?
Not done Harsa yet, but I think in between I will try to do.
I have downloaded the certificate, but I can't show it right now because I'm logged in from my mobile and it's saved in my laptop.
No problem. All right, thank you so much. In that case, that's just yeah. All right. On this note, Navneet, are you there?
Yeah.
Yeah. On this note, I'd like to thank you on behalf of IICSR team, on behalf of our participants and students who've been diligently listening to all the knowledge that you've shared with us. Thank you for taking time from your busy schedule, and we know that there is a lot of change in this country and in the world all over that you have to work upon. Thank you so much for joining us today.
Thank you, and wish you all the very best. Congratulations again. Thank you.
Thank you, sir. Thank you, sir.
Thank you very much.